Now, the last session for today, we're going to look at how and where to secure green finance for your investments and development. Now, to help me in this discussion, we have 3 discussants, and I'll just invite them to the stage, please.
Hi, my name is Harriet Chebet, and I'm a Kenyan national. And I work with a group called Finance and Competence, and we are EU funders. Predominantly, we work with the funds from the Scandinavian countries, and from Sweden, from Norway, Swede Fund, your Nor Fund. We work with impact funds as well, private equity, and even private capital. So prior to, I was actually based in England as an investment banker. That is, I have a background in finance. I was with the JP Morgan and Goldman Sachs and the Financial Services Authority, and moved back to Kenya in 2009.
My name is Dr. Mwenya Kasonde. I am the CEO of Sishima Holdings. We are real estate developers based in Lusaka, Zambia.
My name is Nicholas Mugendi. Working with a company called BIMAS. BIMAS is a microfinance industry, and so I'm an expertise in microfinance, and I'm basically more interested in product development.
Maybe just to begin us off, Harriet, what would you say green finance is?
Okay, green finance, I mean, there's really 3 different levels that we're working at. First is, as we're greening the economy, literally, any project then that attracts finance can still be put under the domicile of green finance. If, for instance, if it became a law that every product that you bring to the market has to have a green element, then there wouldn't really be a distinction between green finance and non-green finance. So there's an element of developing the ecosystem, which is happening naturally. If you look at the way global laws are developing and climate change, this is just going to be something in 10 years, we'll not be saying green finance. It'll just be automatic that every project has a green component. And then there's instruments that are created specifically for green projects, and the examples are green bonds. And my understanding is that this is still very new in this market. So a green bond would have the fact that the financier would specify that this money is only for projects that have a green element or are predominantly green. So those are green bonds.
What would distinguish green finance from our conventional finance?
If there's money put aside, which is what is actually happening with these green bonds, is that, let's say, investors say we want to green the market, even the finance has to be green. So this money, let's say $100 million has been put aside for green finance projects, and the way they can work, even corporates can actually issue green bonds. They can actually buy up these bonds, and then the money is used that way. So in a sense, it's really just a structuring of an instrument. But finance is finance. You know, we were saying money is money. You know, the only green is actually the dollar.
Yeah.
Yes.
How do we rally commercial banks to embrace green finance and offer that finance at concessional rates?
You know, if we're developing a project, we have to make sure that our ROIs and our NPVs make sense before we can ever bring that project to the market and to the financier. I think when we talk about green finance in particular, it maybe gives us a bit more of an edge as developers because we have a bit more of a diversified pool of where to get our financing from. It means we can market our product slightly differently as a green project. And that goes when we're marketing it both to the financiers and to the end user at the same time. So, for example, for us in Zambia, we have a residential project called Inseko Park. It's a residential development, which is green, of course, and it's very much, so we've tried for this particular project to come off the grid as much as possible, so making use of solar energy in particular. And that makes it appealing, of course, for the end buyer. Zambia is not unique on the continent in terms of the poor reliability of energy and of power. So that's been one of our unique selling points, you know, as a development. And what that does for us is it allows us to maybe target a slightly different end user. We've tried to target the slightly higher end buyer. And again, within all this in our numbers, then you know, can make sense. Now ROI is still efficient and interesting enough for financiers to be attracted.
What is your take on the sustainability of green finance to drive green assets?
When you look at the component of the green board, again, the long-term part of it, it's interesting because, again, you look at basically the way the market is developing. And therefore, if there is a green bond that is available for the market developers, then that will be very necessary for them. But again, we have also to say that when you look at the sector itself, like in Kenya, the way the market has been penetrated so far, you may realize that still we will need probably private investors also coming in. And again, when you listened yesterday, the way the presentation was coming in, again, the government is doing a lot, probably in terms of information, but yet you look at the way the country is developing at the county levels and all those kind of things. I think there is so much information that we need to have, even at the county levels, for us to be able to understand what basically is it that the government is offering for us to be able to get into green projects. I think basically what we need to do is more of information, as even the market is able to pick up in the country.
What instruments should we use to bring this to raise the green finance in the market?
Okay, well, as somebody looking from the eyes of a financier, what we want to see is very good projects end to end. So when we look at commercial real estate, which is where we have been least successful in deploying capital, when we look at them, we say, okay, you're building this, you're building 1,000 units, who's going to buy? And in this market, it's always build it and they will come. And that model has been successful because there are people building things and they are finding buyers or people to rent. Or you have situations here where you want to build 1,000 homes for, let's say, the affordable housing market. So your target market is somebody who typically cannot afford a home in the open market. But you find a billionaire comes along and buys the 2 buildings, so to speak. So it's not even, it doesn't even end up in the affordable housing market. It becomes something that somebody is using as an investment tool. So what we say is we want to just see good projects, lots and lots of them. And what that will do, it will attract different types of financiers and different types of financing. So once you have everybody running here to put money in this market, inevitably some financiers will come and say, well, I want to see impact. You know, I'm all about the environment. So why can't you do something with your project or with your building that makes it green? If you have a hospital, why can't it be renewable energy? You know, then he's specifically driving and saying, I will give you cheaper money, or I will give you something else, or you can get carbon credits if you do X, Y, Z. But fundamentally, if you have one very good, bankable, well thought through project, it'll attract both green and non-green finance. So it's just about developing the market and creating good projects, doing good project finance and working together, creating information. There's a big problem also with data because there's people all over the place. Everybody here knows something, but we haven't shared this information. So we don't know what we don't know. We don't know what deals are out there and how many are good. So it's really about integrating the market a little bit more, moving away from this fragmented approach of kind of like, you know, just go in there, make some money and leave.
Would you say there's a green pipeline for green projects in this country?
I think at the moment, probably I would say no. And basically, I'll say that, again, when you look at the project that we are doing, when you look at a conventional project and a green project, again, as my colleague has also said, that you look at the availability of the data for a period of time, that data is not available. And so again, we are still working at a fragmented market whereby you realize that the end use and probably the developer and probably the financier, we are almost working single-handedly without necessarily being able to worry together, and so that we see whether the data that we have for a period of time can be able to give us a mileage in terms of probably making a decision. So probably what we are saying is that the market is developing as we continue to see more investors coming in. What we need to do more is data management that can help us to be able probably to have a say in terms of whether we'll have an advantage at the long-term issue.
Okay. So Mwenya, so what would you say are the impediments to the delivery of green finance to the market?
I think As developers, it's very important for us to be transparent in everything that we do. So if one of our projects is green and is maybe costing a little bit more than a conventional project, we have to be very transparent and explain exactly why it's costing more and why we believe that the cost is worth it at the end of the day. A lot of these projects, for example, the green bonds that Harriet has mentioned, are very new products, and some of our financial markets are maybe a little bit more immature. So for us, we've been really pushed to seek financing internationally. In Zambia especially, we're quite limited in the availability of finance, and not just that, but the cost of finance sometimes can be prohibitive. So I think, when you talk of barriers, I think once there's transparency, number one is very important. Things like bankability, of course, and eligibility all might hold us back sometimes. So I think being transparent is really key here.
I wanted to say perhaps what we can also do in this market is develop mortgages, because we have this magic number in this country, 22,000 mortgages available in the market. So now if we doubled that or tripled that, that automatically creates off-takers, for all these products. So in a sense, we have to develop the market from the back end and begin to work in an integrated way, knowing that what the financier wants to see is he puts his money and then he takes his money out after a certain time getting a specific return. So how is everybody else responding to that? So it's not an individual decision. It's not what the developer thinks or what the financier thinks or what the off-taker thinks or what the maintenance person thinks. So I just think it's really targeted development of this market. The whole green idea is just going to become, it's the same way we had plastic bags one day and another day we don't have any plastic bags. It really was an interesting transition because it happened instantly once we took the decision. So that's what's going to happen, I think, across the world and even in places like this. People are going to say, look, there isn't any air. The sun is going to burn us all. And it's been raining for 10 months or whatever. I've been flooded out. I have to think about life in a very positive, sustainable way. So then everything then comes together. And that is how this market will grow. But at the same time, if we're extremely green conscious, but we have awful projects, then it doesn't really make a difference.
In Zambia, we have very poor availability of mortgages, and that's very much prohibitive when it comes to the end buyer. People are limited in what they can buy, and a lot of the time, people don't buy, they build themselves. So a lot of Zambians are choosing to build their own houses as opposed to buying houses simply because they have poor availability of mortgages.
As developers, I would suggest we start offering people homes that have a renewable energy component and a zero waste component. So if we then begin to sell these interesting, facilities and say, look, you can manage your waste this way, you will save money on your utilities this way, and you're green, it's hip. It'll be hip soon to be green and live in a greenhouse. Not a greenhouse, but in a green-enabled house. You'll be telling your friends about it at the country club. Look at my house, type of thing. So in a way, thinking about waste and wastewater and, portable water. And I know the lady at CDC was talking about water. Water is becoming a very big problem as well. So if we integrate, water also affects food. So, and as my friend from the Penn University would tell you, the whole connection between energy, water, and food is also connected to how we live and the kind of buildings that we are creating and the kind of material that we're using. So in a sense, it's really like developing the ecosystem to become cleverer.
What can government do really to encourage the green funding, the green market to grow?
I think the major challenge here is that, yes, these policies that have been developed are good for green projects, but how does this information get out there? When you look at probably the way the counties have their own plans and the way the government has their own plans, when you look at the way they are being coordinated, you realize that some quite a number of gaps that are going to be there. But I think one of the key things that the government should be able to do that as they formulate their policies and come up with regulations and probably be able to coordinate with the county governments, there is the need for that information to be able to go out to probably the major shareholders in the whole project, the whole area of green finances. And the other thing, of course, again, the environment that the government should be able to create for the investors, to create for financiers, and also, again, because again, when you look at, as you are saying, money, this side is very expensive. then the government should be able to come up with serious discussions to answer how do we be able to probably even give consensus to answer green projects across the country. And that's very key. So I think there is so much that the government should be able to do moving on. Again, when you look at the project 2030, you look at what the county governments are coming up, I think there are quite a lot of gaps that are there, and there is a lot of market that is being neglected. Not because, again, there are no opportunities. It's because, again, a lot of information probably being served at the government offices without necessarily being able to get to where it should be able to get.
How do you go about creating a database of information so that today we can put a number on this is the amount of green projects in a pipe by area, by location, by sector, by asset class? How do we do that? Because that seems to be either not there or not very well done.
I mean, one of the things that my company is trying to do is actually to collect data on real estate in general, not just on green projects, but on real estate prices in general. We don't have much data on real estate prices, real estate indices, real estate price trends. We don't really know what's going on. We're really just guessing. There's no hardcore data. So to be honest, that's a tough one, Abraham. That's not something that we're trying to do, but it is a challenge.
The people who have this data want to sell it. So really, they'll say, well, I could use this for my feasibility study, and pay me 5 million shillings or 10 million shillings, and I'll tell you what's happening in the market. But so there's like a type of hoarding of data. So what happens here in the commercial real estate is, you're a developer, they're a developer, that's a financier. It's like, you don't want her to know about that financier or that developer. That developer doesn't want your finance to know about that developer. Yeah. So it's just that kind of like fragmented information, which doesn't help anyone because it actually pushes the price up. Yeah. And it's also it's like what's the word? It's not a real price. When you say it's artificial. It's artificial. So in a sense, actually, in my opinion, even buying a home in Nairobi or doing anything in Nairobi, it's expensive because of this hidden information. So I suppose what will help is obviously with smartphones, with WhatsApp, with the kind of information being traded now online. Somehow that is now being captured. If you look at the fact that you have all the analytical companies here, the data analytics, who are picking up information all the time, how much does Harriet spend in Vivos? She buys a dress for 3,000 every 3 weeks. Now that data is being captured. So with time and with the Internet of Things, obviously, you'll be able to pick up a glass and it's going to know and send some information that how much water did you drink. Well, that's just my own fantasy around the Internet of Things. But in a sense, I think all that coming together, it just makes it inevitable. So there'll be a time when there'll be open information. There'll be like a type of open source platform, even for housing and for the real estate and for the investment market, and that just makes everything cheaper.
Who are the major players in this market in terms of giving the finance?
It's your typical players, the World Bank, the IFC, and everybody else who will follow. So the World Bank sets the tone and says, okay, from now on, we're not going to be supporting fossil fuels, no more oil for us. So we're looking at renewable energy, preferably solar or something like that. And this is how we want to see it. Projects will start being developed to cater to that demand. Now, when other financiers see that, even private capital, someone will say, well, I've got $10 million, and I like what these guys did. I like that whole business model, and maybe I went to a hotel that was green, and the air was the air was so fresh, and the water was so sweet. So in a sense, the market creates itself. I mean, that is kind of my opinion. This is really like a dominoes effect.
Okay.
So at some point, everybody will be offering it. Just like now, if you look at the market, there's a big push in Africa for renewable energy. Yeah. But 10 years ago, nobody was around here looking for solar projects. So it just developed itself. Now you find somebody who was in private equity focused on technology is now focused on renewable energy.
Energy is true. Yeah. How do we bring this down from these major deals for green finance to play in the microfinance sector?
If you look at this market, there is a market that has been developing all through. I would say that like in Kenya, microfinance industry has actually developed. And you realize that down in the counties whereby people have been able to, start from a very small scale level, Today, we have several people who are able to probably do projects worth 100,000 to 200,000 US dollars. And again, when you look at it from a point of a land scale, it simply means that it's more of a functional market that has not been developed yet, and probably the challenge here is whether we could have investors, whether we could have developers who could have an interest in this area, because again, you look across the board, several market players who probably could be able to intake a lot of these kind of projects, incorporate green, green projects within where we are serving, but yet you realize that it's not an area whereby probably quite a number of investors have been really been keen on. And the challenge probably in this kind of a setup is whereby probably people should be able to start developing kind of an interest in the low-end market who can be able probably to grow over a long time. And then again, there are quite a number of returns that are going to come over. That's the challenge, that's the gap that we have not been able to probably address. But I'm sure maybe probably some of our players here could have an interest in that.
Why should I do green finance?
I think the important thing with green finance is the long-term benefits. So we've had discussions throughout the day about obviously efficiency and cost of utilities and the cost of running a building. Don't just think of it as the capex. You have to think of it long term.
Yes.
And long term, if it's going to save money in the long run for the end user, for the buyer, for the occupier of the building, then obviously it then translates onto you as a financier. And obviously that's just one aspect. You also have the socioeconomic elements as well, but the environmental elements as well. But I think of it long term. That's key.
I'm a developer. I have a project. You want me to do it green, but it might or might not cost me more. So how do you convince me not to do it conventional?
I suppose if it's cheaper, if I can offer cheaper financing,
Yes.
right? If I have enough data,
Yes.
and you have quantified your project
Yes.
correctly,
Yeah.
and I'm happy with the returns, and the incentive I can offer is maybe 0.5% less.
Ladies and gentlemen, I think at this point I want to open it up to the plenary for anybody who has questions.
There was an assumption raised around lack of data, around the green project portfolio. We're a tiny NGO, but we maintain a portfolio. We maintain the information, and we just gather it from different sources of every green building, green registered building, and green registered project in Kenya. It can be done for anywhere in the world. We use international certification tools, so whether you want to know whether a building is being registered in Zambia or Rwanda or wherever, that information is available. So we don't charge for that information. We will give it to anyone who asks, and we essentially go around very evangelically talking about this stuff, right? So I would like to challenge that number one, that there is no data and that there is no pipeline. It's about, I absolutely agree with you, how people make money, particularly in this town, is the arbitrage on the lack of transparency of that data. Yeah. So things that you could Google in any other country outside of Africa, you can't. The data we're going to get is going to be North American or European or South African data at best, right? So absolutely transparency is a challenge. Basic things like how much square footage or square meters of commercial or industrial or residential space actually exists in African markets, and how much of that is going green. It is very difficult because a lot of that space isn't even documented. Mm-hmm. So the likes of the Knight Franks and Broles and all of the major real estate players that CBREs that publish a lot of this data have data for South Africa. There is some data for Kenya, but you won't necessarily see it that transparently. You can go onto the websites and find certain of that data. We also have a government agency called the Kenya Building Research Council that has just been re-inaugurated yesterday. So this data transparency will be improving very quickly. The third one around lack of green finance products. I'd also like to challenge that because earlier this afternoon we heard about the Green Climate Fund, we've heard about the Climate Change Fund, we've heard about the Kenya Green Bond Program, and Kenya is not unique in this. South Africa has a large variety of green finance initiatives. And what are the sources beyond the DFIs that you talked about is also every Kenyan bank is actually a signatory to the Sustainable Finance Initiative. So that it's an important point because the branch people may not know, but the head office people do. So you need to go up the food chain to access those facilities. A lot of these banks have facilities with the likes of IFC, with the Sunrefs of the world, but the people at the branch level won't know how to access them. So I encourage every developer to tap into that, and we have made it as open source as possible to access that information because I absolutely agree the transparency of it is very poor. Right? So the availability of products, everything from debt to equity to quasi-debt, there are a variety of financial instruments available and being launched in the market that can be used. The last point I'd like to make around some of the solutions, we talked about green mortgages. There's no point talking about green mortgages if there's no green pipeline. And there's no talking about a green pipeline if we don't have project finance to finance it. So we need to flip it on its head and have the entire ecosystem of players developing, the players financing, and the players helping with the offtake. So it needs to be a seamless ecosystem that's working together because just focusing on the offtake when there isn't the underlying green asset is going to be a pointless exercise, right? So I did want to just challenge that assumption there. And I think the final point I'd like to leave you with is that in most African markets, we do not have, outside of South Africa, we do not have a very good transparency on how these, all the players, like the MSME finance, the developers like yourself, the financiers who are working in this space can collaborate to mobilize that green project to happen, because the innovative solutions, the challenge is the developer doesn't have to finance it, particularly in the energy and water space. The Kenya Pooled Water Fund is going to issue the largest debut green bond, and they've done several bond issues to finance water assets. So it's not the developer that has to do that. It's quite established in the solar space, it's innovative in the water space. So I do think that those instruments and the players exist right here in the market. We just need to demystify who they are and bring the supply and demand side together.
Are you saying that there's also early stage, like, you know, the kind of money that investors don't want to put in, the one with the highest risk? Perhaps these funds might have that kind of money that can help develop these projects. So in a sense, this money can then be used to, you know, develop the concept of the green asset, do the feasibility study, create the off-takers, or spend time with off-takers raising awareness. And that way, because I know that is how we solve the challenge of renewable energy projects, is that we have early stage money come and fix everything, and then after that, the sort of quote-unquote true financiers can come in.
So the early stage money, the capacity development money, is generally focused on the supply side of who are the solution providers in the energy space or the water space, the innovators in that space, right? The materials, being able to bring soil stabilized blocks. You can do it in a rural community and build an entire hospital with soil stabilized blocks, but how do you industrialize it? How do you take that to a higher level? So a lot of the DFI money, we've been through, I think, 4 sessions just in the last 2 months with Danida, with the German GIZ, and so on, that are doing exactly this. They're seeding incubator money to develop these solutions, because a lot of the solutions to those challenges need to become homegrown solutions. That money does exist. It's about how do you access it. Just like the person from National Treasury said, most of the government agencies are terrible at promoting what is actually available. So we need to demystify that. We need to democratize the access to that information. But I guess after a year of thumping my head against the wall about exactly the same issues all of you have raised, it has become abundantly clear it's just a supply-demand mismatch that needs to get resolved, because all the right players are, in fact, a lot of them are sitting right here.
But if we talk about the CapEx spend, obviously that then, on the flip side, you need to think about the cost of that money. And then on the kind of OpEx side, and how much money you could potentially save or not save by being green, you need to then think about the revenue stream, right? Because that is what's going to incentivize people to go green, is if we can kind of spread that margin or the incentive to install what has traditionally been, or at least been perceived to be expensive CapEx material, and then how is that going to affect my OpEx down the road? So if you come to me and I'm a developer and you say to me, well, we can now actually sell you stuff at circa the same price or even cheaper than the non-green stuff, and it's going to affect your operating performance down the line, then I'm going to go green every day of the week. So I just want to know, and I see stuff. I had a conversation over the weekend with somebody in Bangkok, and there's a lot of technology coming out of Asia and Australia that is kind of bridging that gap. But I don't know whether that technology can come into a market like Kenya without incurring serious kind of duties or anything like that. And I just want to understand if that gap's being bridged here locally, or in Zambia or anywhere that we know of in the continent. Are we seeing people actually say, look, it is actually now cheaper to build green, and it is going to have this serious positive effect on your bottom line?
Fundamentally, with energy, for example, it's quite an established model for a player, and these days most of the players are South African players coming into the market, doing the energy installation. They take on the capex, so it doesn't even hit the developer's project budget at all. So yes, they come and install, they operate. It's a 20-year operating lease. So what you're doing is essentially removing the entire thing, right, from the project budget. And they are essentially becoming a micro-utility. So instead of paying the utility, you're paying the purchase. It's a power purchase agreement. Okay, so that's one very simple mechanism of just removing the entire question of what's it doing to my bottom line, and how do I pass that on? And exactly, right? The same thing's happening in the water space. It's a little more immature in the water space, but in Kenya, for example, we now have the Kenya Pooled Water Fund, which is, and water has now devolved from as a national asset to a county asset. Now, how are counties going to fund the infrastructure investment of these? It's essentially through these pooled water funds that are funding businesses. So it's creating economic opportunity for MSMEs to large corporates that are coming in and doing exactly this, creating micro water utilities to service projects, right? Now, in a large master plan community, one of the other mechanisms that one can use is you take all of these utility assets where you're having to build the roads, the access roads, you're having to build the power stations, you're having to build the water yourself. You can separately capitalize these in a special purpose vehicle that becomes a service provider. So, and again, it's not part of your development budget that you need to pass on to your buyers, right? So those are, I will take some license. On the materials front, that's one important one. There's a couple of major material elements that supplier finance tends to become available for. Why? Because they're subsidized by the foreign governments that are exporting the materials to markets like Kenya. So even when I'm sourcing engineered wood from Italy, it's actually being manufactured in China. So I'm not paying the Italian tariffs, I'm paying the Chinese preferential tariffs because I'm importing directly from the factory in China, but to European spec. So those are some mechanisms that help take it off. And why it becomes very important, any affordable housing developer is that much more price sensitive to every shilling of additional investment cost. So these are the mechanisms to remove it from the development budget into separate components, because it's not, the developer has no vested interest for something they're selling to take the capex. So what it's doing is someone else who's an expert in the field at not only installing but operating comes in and maintaining, because then you've got a much more sustainable development over that 50-year horizon, right? So those are the elements, and we have a lot of these players already in the market today.
My name is Ipora. I apologize for joining the conversation late, but I had one or two questions I wanted to pose. So, okay, first of all, I knew this event by accident, but I am a curious George when it comes to sustainability, because I do know of university students who are curious about how they can reform their mind and change their perspective when it comes to developing their own country, more specifically design students at the University of Nairobi. So I'm hearing a lot of talk when it comes to industry players and professionals, but what are you guys doing? What is the discussion when it comes to sustainability in design? Because, well, obviously, design is in everything: technology, construction, railways, roads, everything you can think of. But what are you guys doing or thinking of doing when it comes to educating students, when it comes to efficient properties, when it comes to the SDG goals? You know, what are you guys thinking about doing in different countries for the emerging generation?
I have a positive answer on that one, because we now have somebody who's approached us, and what they are going to be doing is running music festivals around renewable energy. And they want to be doing these. They're going to partner with the people who used to do blankets and wine, but kind of like flip it around and making about teaching students about renewable energy and running renewable energy mini projects or mini workshops within that setting. So there's actually somebody who's come and said, I want to run 2 of these every month for the next 2-3 years with high school students and with university students. So that's sort of like raising awareness.
So they've done a great job in terms of having not just green energy, but green water systems, recyclables, and waste management. Everything about it is green. And I know that one of their challenges has been actually educating the end user, especially in terms of waste management. People still don't appreciate the importance of recycling in Zambia, so they're not necessarily using the facilities that have been put in place. So what Foxtel are now using is they're running workshops, similar to what you're mentioning. And so you can go in on a certain day and visit the facilities, get taken on a tour of the whole facilities, and get taught about what exactly is available and what exactly is going on in terms of their green development.
It takes a lot of convincing. It takes us coming to a 2-day conference to convince us to go green. You guys get it, right? The issue is, in the construction, real estate, architecture space, you guys are being taught that, to our 1968 building code, okay? So when you come out, you're unprepared for all of this type of conversation, because the curriculum is designed to teach you about how to comply with the building codes. Right? So NGOs like us, I am a volunteer for the Kenya Green Building Society. Volunteers like us go to the universities, anyone who will have us. Because the university administrations themselves are difficult to penetrate, it's the student bodies, the Construction and Real Estate Students Association, the Planning Students Associations, the Interior Design Students Associations, and so on. And they invite us to come and help plug that gap. So we will go to as many events as we get invited to, and that's part of the volunteer work that we do. We also offer a student board position on our board to become the ambassadors. We would love to have a Kenya Green Building Society chapter in every university, in every construction and real estate and engineering school in the country. We just need one champion to kick it off. So you're more than welcome.
Thank you.
And I'd like to add that we as developers and potential employers of today's student, we offer 6-month internships to change the mindset from that 60s build code into contemporary picture. And we always open to, bright and willing to discover students.
And I'd still emphasize that, this is about all of us. It's about whether you're a student, whether you're an entrepreneur, whether you're a builder, whether you're a stay-at-home mom or whether you're a nurse. This affects you, how your living space and how you're interacting with the environment. So get involved at any level. As my colleague was talking about, even as a volunteer, I hadn't actually thought of that. That's really clever. And if you can influence your county or people around you or people in your villages, to start thinking about this green economy.
I guess the take-home message for me is it can be done. And not just it can be done, but it needs to be done. So I think it's now for us to go back to our own offices and homes and push the message where we are.
And probably the challenge here is to get more information and interact with the people who are in this industry already and those who are doing something about it. Then at the end of the day, all of us will be able to move on and probably get advantage of the opportunities that are there.
So thank you very much for listening to us.
I guess from my perspective, what I've learned today, about a heck of a lot over the last couple of days, but I think I'm getting the impression that we need to now dig deeper. We've got this framework of some discussions, but what I'd like to see now is some proper actions coming out of this and finding how we can actually dig deeper into some of these discussions and take them going forward. But ultimately, we knew this was a sort of start discussion with this group of people. Absolutely excited that Bench Events have been able to lead this discussion going forward, and look forward to seeing you at the next one. Thanks very much, and I hope you've enjoyed your couple of days. Thank you.